You've seen many of these corrections, many of these today alone. We've all seen a couple of corrections. What is different about this market turmoil, if anything?
Janet Yellen is gone. And literally the day that her successor, Mr. Powell, was sworn in, volatility surged. One of the characteristics of the Yellen Fed was that volatility collapsed from her predecessors, from Bernanke, 8 years, Greenspan, 20 years, even Paul Volcker, if you want to go back that far. What does that mean? Janet Yellen was a very effective communicator. Her Fed was very good at giving people very clear direction about where the economy was headed, and as a result, the markets were much more, shall we say, subdued or behaved, even as they were appreciating. The difference now is Powell is a bit of an unknown, even if he was at the Fed for quite a while before that. And that makes all the difference. And that's why we're seeing this uncertainty.
Just going to show viewers actually the chart of the VIX that you mentioned throughout those years. This spike obviously is high, but it's not like what we saw in 2015, which is a little bit higher. But all the way back in 2008 was where that other previous high was. So yeah. You're right, the whole Janet Yellen period was calm. This, even as the new Fed chair released a video on the day, for example, on the website and so on. Will it be a priority for him to have the VIX down, or will he care about the VIX?
Well, he's not an economist.
Yeah.
That's another fact that won't go, unchallenged among people in the market. They're going to try to figure out, okay, what sort of a leader is he and what kind of a Fed do we have? Right now, the Fed is relatively inexperienced compared to the Bernanke Fed and even compared to the Yellen-led Fed. So the combination of an unknown leader who isn't an economist, isn't familiar with economic challenges the way Janet Yellen certainly is or Bernanke is, that's going to make a big difference.